Hey everyone, welcome back to the Gap Advisors Ind AS Clinic YouTube channel. Today, we're diving into a brand new explainer, and honestly, if you're the kind of person who loves peeling back the layers of complex accounting scenarios to see what's really going on behind the numbers, well, you're in the right spot. We've got a seriously fascinating, hands-on case study today all about trade receivables. Now, before we get into the weeds, I do need to quickly lay out a very important disclaimer. You know the drill. The views expressed here are the personal views of the author, and they aren't legally binding. So please definitely seek out expert help before taking or holding back on any action based on what we talk about today. All right, here's our roadmap for this clinical autopsy today. First, setting the baseline. Second, our trade receivables observation. Third, the derecognition diagnosis. Fourth, the offsetting error. Fifth, we'll check out the Gap Advisors Knowledge Hub. And finally, consult and subscribe. Okay, let's kick things off with part one, setting the baseline. So just to make sure we're all looking at our patient through the exact same lens, here are the ground rules. Our functional and presentation currency today is the Indian rupee, or INR. So any currency that isn't the Indian rupee, that's a foreign currency. Also, our reporting period runs right from April 1st to March 31st. Okay, baseline set.
Moving right along to part two, trade receivables observation.
All right, meet today's patient. This observation actually comes from the published Ind AS financial statements of a listed company. Gap Advisors downloaded and independently reviewed this on a sumo moto basis. Basically, we went digging on our own, and boy, did we find a great teaching moment. The company's notes actually disclose that they transferred their trade receivables to a bank. Now, right away, when you see a transfer of a financial asset like that, alarm bells should be ringing. It brings up that absolutely crucial test of Ind AS 109. Does a transfer actually mean it leaves the balance sheet? Well, let's see. That brings us to part three, the derecognition diagnosis. So we need to pop the hood and see how this specific transfer actually works. Does it genuinely qualify to be wiped off the books? Looking at the notes, here's what happens. Step one, if the bank fails to recover the funds, it triggers step two. And in step two, the bank basically turns around and claims that exact amount right back from the company. Then, step three, the company has to go and recover the amount from the beneficiaries, plus a surcharge. I mean, this sequence tells you everything you need to know, right? The ultimate credit risk literally hasn't gone anywhere. If things go south, the company is still completely on the hook. So what's the official diagnosis here? The company did not transfer these significant risks and rewards to the bank. It's really that simple. Because the risk of non-recovery just bounces right back to them, this whole transfer totally fails the derecognition conditions under Ind AS 109 for financial instruments. Bottom line, you cannot take it off your books if you're still carrying the primary risk. Now for part four, the offsetting error. So what exactly happens when you fail that derecognition test, but you kind of just pretend you passed it anyway? Well, the company wrongfully set off the trade receivables against their financial liability. But under Ind AS, if the transfer doesn't qualify for derecognition, that cash you got from the bank has to be recognized as a completely separate financial liability. You can't just offset the two. Doing that is a direct violation of both Ind AS 32 and Ind AS 109, and it totally masks the company's real leverage and asset position. And you know, this is exactly why it is so critical to get your financial statements reviewed by Gap Advisors before you sign off on them. A simple error like this can skew your whole balance sheet. And hey, if you happen to invest in a listed company's shares, an independent review of their financial statements for Ind AS compliance can be a total game changer for making proper decisions on buying, holding, or selling those shares. Actually, companies and audit teams can just email their near-to-publishing PDF financial statements right to info@gapadvisors.com for this exact kind of review. All right, on to part five, the Gap Advisors Knowledge Hub. If you're a finance pro or on an audit team and you want to dodge these kinds of costly, stressful errors in your day-to-day work, I've got a fantastic resource for you. The issue repository over at gapadvisors.com currently hosts over 4,500 issues and their detailed responses, all about Indian accounting standards and Indian GAAP. Literally anyone can register for totally free, submit their own issues, and get a detailed response sent straight to the inbox of their registered email. It is especially gold for auditors who need to rigorously document exactly how they addressed an Ind AS application issue. By the way, the specific case we just dissected didn't just appear out of nowhere. It was actually featured in the 199th edition of the Gap Advisors Task Weekly newsletter. This insightful piece was authored by CAI Monish C. Iyer, the director of Gap Advisors, and was originally published over on LinkedIn. And honestly, they haven't slowed down since 1999. To date, there are over 230 editions of this weekly newsletter out there.
It's just a massive goldmine of practical, real-world accounting analysis. So if you are registered on LinkedIn, you should absolutely subscribe to the newsletter for free to get these insights right in your feed.
Okay, our final section, Part 6, Consult and Subscribe.
If you want to take your Ind AS knowledge up another level, here's how you do it. First, you can actually book a one-on-one consultation for your specific Ind AS and IFRS issues directly with the author via his page on topmate.io. Second, definitely follow the Gap Advisors Ind AS Clinic channel on WhatsApp. That's for sure the quickest way to get instant updates on all our new explainers, podcasts, newsletters, newly responded issues, and new standards. And lastly, check out the Gap Advisors Ind AS Clinic podcast on Spotify, Amazon, or right here on YouTube if you want a really deep dive into the observation we tackled today.
Well, I just want to say a huge thank you for your time today. If you got some value out of this explainer, please go ahead and hit that like button, drop your thoughts in the comments, and make sure you're subscribed to the Gap Advisors Ind AS Clinic channel if you aren't already. Also, it would be absolutely amazing if you could share this explainer with your contacts, your colleagues, audit and finance teams, and especially among students pursuing their CA course. Spreading accurate knowledge of Indian accounting standards is what we're all about, and your shares make a massive difference.
So I'll leave you with one final provocative thought to chew on the next time you're reviewing a balance sheet. Are your trade receivables truly derecognized, like actually passing the complete test of risk transfer? Or is there a hidden liability silently lurking in the numbers? Think about it. Keep questioning, keep learning, and I'll catch you in the next explainer.